Good morning. It is June the 8th, 2016. Time to start another trading day. And we are going to come into today's market with equities around the globe. Mixed. Japan, FTSE up. China, Hong Kong, the DAC, and the CAC down. Our market is higher and pointed higher this morning. Crude oil was cited as the major reason for the world equities markets being higher. Commodities continue to rally. China's imports and exports were below expectations by a bit. So China's economy, at least from the reported news, continues to soften. And they're going to have a hard time meeting their official economic projections or demands by their reporting bureaus to hit those numbers. So equities, the E-mini is pointed up this morning. That'll be a negative for financials. We don't have any news here in the United States to speak of. Then we have the 10-year auction. And at some point that'll bring in buyers. So JOLTS is the major news we had today at 5.757 million. That can be taken as a surrogate for the state of the job market and the economy, and crude minus 3.2 million barrels. And that would also support crude. Inside that crude, they'll look at overall daily production numbers. They'll look at actual inventory levels at Cushing. So there's always a chance for a whipsaw. Then you have the variation in draws and builds in crude versus products. They'd like to see draws in crude. They expect to see draws in gasoline because it's the start of summer driving season and inventories are moving from the refineries out into tanks at gas stations around the globe. So here we find ourselves. We left yesterday's market wanting to be a seller. We thought we'd find the high in the Globex of the overnight session, and we weren't afraid to be a seller. And we had a sell at 31 to 03 last night, and that's where our sell happens to be today. So our assessment of the market and what was likely to happen in the overnight session was spot on. On the buy side of the market, we have our attractor at 126, pulling the market to it. We've got support basically at 20 to 24. I think we're going to get there, so we'll put buy 1 at 20 to 24, buy 2 at 13 to 17. And at some point today, if the primary dealers want to move the paper, they're going to have to come in and support the market. So not afraid to be a buyer into weakness this morning, and the idea that we might rally into the auction at noon. That buy can come as late as 11:30 Central, 12:30 Eastern. It's just that you can't move the paper when the market is headed lower. And that's the biggest reason behind why we want to find a spot to buy today. I think the market will trade lower off the early opening, so being a seller early is a reasonable trade too. But just won't press it to the downside. Okay, looking at the 30-year, which will auction tomorrow, by the way. And it's the toughest piece of paper to move, but they set up the 30-year with the intermediate term, the 10-year. They set up the 7-year with the 5-year. That's where we find ourselves today. Okay, 16 to 20, 1, 23, 27, sell 1, 31, 03, pretty much where we were yesterday. We had a 23 to 27 sell, and the high in the overnight session was 23. On the buy side, we're at support. We've got the single print right here, so 4 to 8 would be 1, 29 to 1 buy 1, 21 to 25 buy 2. The focus initially and early in the session will be the direction of the E-mini or stocks. All commodities were higher overnight. Germany, the European Central Bank began to purchase corporate bonds last night. Their market was higher. Their treasury market prices are higher because of the ECB stepping into the market. Again, by approving the purchase of corporate bonds, you have to think that most of those corporate bonds will be to go shore up Germany and everybody, other EU members, banks' balance sheets. Find an outlet for that paper, because that's where the sovereign debt is, and that's where the problems are in Europe. While Germany's economy has been strong, the rest of the European Union's economy has not been all that strong, and the problems are still there, and you especially see it in Greece, in Italy, and in Spain. And the Brexit, Britain's exit from the EU, doesn't look like that's going to happen. And again, it's just what's in place tends to stay in place until it's broken or smashed, and that the odds of the Great Britain taking themselves out of the European Union pretty damn low. Okay, I got this low volume number at basically 64. We have the next high volume area up there at 66 to 68. So we're at 57. Looks like we're pointed higher. So 59, 61, sell 1. 64, 66, sell 2. Gives ourselves a little room for a little penetration, probe higher before we have to step up. The breakout came from 52, so 50, 52, buy 1. And frankly, may take 55s early in the session, so we'll put a question mark at 55. And 45, 47 for buy 2. Blew right through 1250. Started in Asia, the probe higher, and London continued the rally, taking it to its present level at 57. Okay, gold's got the volatility. The crude trading rules work very well on gold, because it is an exaggerated form of a go-with market. Dollar's off a little bit overnight, up and down every other day. Tends to be the way that one is played. Sometimes a couple of days. But ever since the Fed said won't be raising interest rates come June, in the Fed's way of saying those sort of things, the dollar has been under pressure, and it's likely to remain so. We've got our attractor up here at 114, say 15 to 20. 114 is a round number. So sell 1 will be 114 even, plus or minus. And then sell 2 will be 15 to 25. Picking up this high volume area right there. On the buy side, 60 to 70. Then 30 to 40. I'll make it 35 to 45. Crude oil. Today is inventory day. Rich Genders will be on today for his weekly webinar on crude oil and how to trade it and what he's seen. Has anything changed? And crude oil is pointed higher. We had that low volume number at 50.60. We got to that. Really, the next stop structurally on the longer term charts is above 52.5. So 52.50 is the next trading target, and we haven't been there since last fall. So the market's strong and is pointed higher, and it just, it shows to Goya that you can't really rely on fundamentals. So a little bit higher this morning, 25 to 50, sell 1, 75 to 52, sell 2. The long side is the side to trade from. The breakout came from 50.50. So 50.50, 50.75 buy 1. And then 50.50 and a quarter buy 2. Okay, the E-minis pointed higher. Remember, the dog for the world's equity market is the United States. It's not the other countries out there, so they follow our lead. And we have been trading higher, and we've been holding those gains. 5 to 7 is where there's really, really good support. Resistance starts at 18 to 22, so there's some chart resistance at 22, chart resistance at 25. Actually, it's at 26. And if we get through that, I mean, there's no reason not to make new highs. And if you read the overnight market summary, commodities up, bonds are up, stocks are up. Based on Yellen's last statement, central banks will continue their accommodative policies, buy everything. And that's where we find ourselves today, totally dependent upon central banks. And the central banks have painted themselves into a corner. And there's no easy way to get out of it. So we're going to sell failure to take out 18 to 22. Then 25, 27, let them get stops above 25. Picking up that chart break at 26. On the buy side, the first buy is 9 to 11. Very, very aggressive. And the second buy is 5 to 7, not so aggressive. Today's news, Jolts 5.757. No one pays any attention to that. It is the only piece of news. In crude inventories, minus 3.2 million barrels. The energy traders will pay attention to that. But crude is certainly playing a part in this rally too, as all commodities are. And commodities have been in a rally since February of this year. And what's interesting, that spread managed program that I'm a part of was based on 25-30 years of inflation, and the only reservation I had on whether it would work or not was the impact of deflation. And since February, actually since March, when it turned around, the spread program is doing what it's historically done. So if commodity prices have bottomed, then that's the first spot that the market will look for signs of inflation, and they could certainly be there. It's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.